Well, the Wall Street fails to hold the recovery on Friday, ends at over a one-month low. The Nifty and the sensex recorded the fourth straight week of losses for the first time in the last 15 months. Banks languish while mid-caps do better. Hello and welcome to the Editor's Roundtable. Today we tell you why promoters are on a selling spree. We also decode the pharma outperformance that we've seen and tell you what to expect from the BRICS Summit that happens next week. I'm Sonia Shenoy, and today with me, editors Ekta, Prashant and Nigel. And also with us, joining us in the studios, Amish, Shah, the India equity strategist at BofA Securities. Editors, Amish, thank you so much for joining in. You know, this is an important, it has been an important week of trade because one thing is for sure that the market is on a downward trajectory. It's the first real signs of a correction. A correction may come or not, you don't know. But at least some pullback is what the market is definitely seeing.
Looks like it, because I said this last Friday as well, Sonia, and we are down, I think, a little bit this week. I think we're down about 1% or so. Yeah. But there's no worry, there's no panic. I mean, people are okay. I mean, it's okay. I mean, the market's coming up. I guess it's just a function of how much money people have made, right?
Prashant, I think it's just because on Fridays, generally your mood is like that, you know. You don't worry about anything on Fridays.
Let's put that to a vote. Who thinks people are worried? I think people are not worried?
I think it will depend on the FII figure that comes this evening.
Are you worried?
I'm not that much worried. I don't think that markets are going to have a very large pullback. Obviously, right now, market needs to absorb four key concerns. And it's about rising inflation in India. It's about higher bond yields globally. There might be a potential China stimulus, and the electric grain. So I think near-term markets will probably absorb that. I don't think it is going to be a large pullback. And I think markets will do better from here.
You know, Amish, yeah, that's a spirit. You know, Amish, and actually we're down for the fourth straight week, but it doesn't feel like that, right? 0.5%, 1%, par for the course after the kind of run that we have seen. But let's focus on a couple of big aspects, you know, like the data points that we're getting out of the United States. And everyone is waiting by for whether hard or soft landing, what's going to come out of that. But it seems for now, at least the US could avert a recession. Will that be good or bad news?
I think that will be good news, Nigel. In fact, as a house, we've taken that view in the US as well. We think that it will be a soft landing. I think if you even reflect our own views last year, we were quite concerned about US getting into a recession. I think that was the biggest risk for the market. If the scenario of no recession plays out, this is actually going to be one concern gone for the market. And historically, we have seen that has led to valuation expansion for markets in general. Every time when US has ended the recession, in fact, Nifty has delivered better returns than that of S&P because Indian economy just rebounds much faster.
You know, the point, Amish, just to come in there, the point that I was trying to make was that the data points that we keep getting out of the United States are always a beat. Whether you look at the retail sales, you're looking at the jobs market as well. And very strong data from the US could keep the Fed higher for longer, which from an equity market perspective may not be too good, right?
So absolutely, and I know that that is being viewed as a risk, but I would in fact argue that a large part of this is driven by fiscal stimulus in the US. If that were to be pulled back, that I would look as a worry. As far as the liquidity is around, and if it is, I think that will be considered as a positive, with FII flows being positive towards EMs as well. And especially given that China is not doing well, a large part of that flows into India.
Okay.
I mean, Nigel, you were saying, we were discussing this in the morning, right? Data seems to be so good that it is actually bad, right? I mean, especially out of the US and here in India as well, maybe. Here in India, maybe returns have been so good that it is actually at the margin.
Data doesn't matter. The CPI at 15-month highs.
At the margin, maybe a little bit. Actually, there is a measure of economic surprises, economic data surprises in the US that is now tracking at the highest since 2021. So 500 basis points of rate hikes, and the US economy is just super strong. Although mortgage rates are at whatever, 7.5%, at some point the slowdown will set in, not yet. And that's the reason why, I mean, just to kind of corroborate what Amish spoke about, the 10-year in the US is at what, 4.3%. It's at a high, at a cycle high. And of course, bets are rising that the Fed will need to do more, which is that, higher for longer kind of sentiment, which is starting to creep back in. But is it really possible that we don't get any landing and the market just continues to take off? That is the point, right? I mean, we don't know. We'll be wiser in hindsight, but at this point, it's you're saying that it's more positive than it is negative, a condition like this.
Absolutely, until the fiscal stimulus continues. That I would argue is a key risk to watch out for.
Okay. Well, just want to summarize what the markets did this week, right? I mean, as we were telling you, it's been a fall for the fourth straight week for the market, and this is the first time that we've seen 4 weeks of a fall in the last 15 months. It was a 1% fall that we saw. The mid-cap index, though, was flat. So there was a bit of outperformance that we saw from the mid-cap index this time. Now, if you look at the sectoral movers, right, within the metal stocks, you saw the largest amount of fall. So whether it was Hindalco, JSW, Tata Steel, even UPL, Coal India were all your top nifty losers this week. And then you had Adani Ports, HUL, Adani Enterprises, Infosys, Titan were the top nifty gainers, and a couple of mid-cap gainers included the likes of Escorts, Kubota, Trent, PVR, REC, Bata, that were the big mid-cap gainers. So there was a lot of course, churn that took place this week. But Amish, I wanted your thoughts on one sector that has come back, which of course Ekta will talk about in greater detail, which is pharma, right? And a lot of the companies also indicated that pricing pressure is now receding. The growth is picking up across even domestic and international markets. If someone's missed the bus there, is there still more to go?
My answer would be selectively yes. It has to be more bottom-up. So stocks or companies that are diversifying more into specialty drugs, or the ones which are more a little bit more toward more focused on India, or the ones which have a stronger pipeline of new launches. I think those will do well. But by and large, I would not say that, I will not paint everything with the same brush. Valuations for the sector are still reasonable.
Okay, all right, that's on the pharmaceutical space. But I think one of the big trends has been promoter selling, which has taken place. We've seen a significant amount of deals take place. Nigel, you've been collating the data. I think it's the highest level that we've seen in 2023.
Yeah, that's right. Let me just go to the big wall and, focus on a couple of aspects out there. So the big question is, who is getting it right? Either the promoter entity is getting it right, or investors, they're getting a good entry. So that's the big question out there. And the question arises because the kind of selling we have seen from the promoter entities. Now, in this calendar year so far, they've sold closer to around $10 billion. No, there's no mistake out there. $10 billion is what they've sold. And just see how the comparative number is in comparison to the previous years. Keep in mind, we've got nearly around 4 months more in terms of data, but we're already at around that $10 billion odd mark. So you compare it with last year, you'll see it's nearly double. And the last time we had such a big number, anywhere close was in 2020 odd. But you'll say the market has gone up so much. So it's not really correct to compare, just the absolute number. So we said, let's compare the promoter sale value with the average market capitalization in a particular year. And it comes in at around 0.3% approximately. But keep in mind, 0.3% was in 2020 as well as this year. But what you need to keep in mind is the absolute market capitalization has nearly doubled. So it's on a far larger base. Now, in August itself, this promoter selling has picked up and picked up big time. Nearly around $3 billion worth of promoter selling is what we've seen. And just in the past week, you had a big trade coming in on Adani Power with the GQG group. Well, they came in big time. JSW Energy as well, GQG played a role out there as well. And Interglobe Aviation as well. You put that together, $1.5 billion worth of selling just in this week. In the, prior to that, in the month of August itself, you had a couple of large trades. Whether it was Adani Green, you had Vedanta as well as CMS Info. And a couple of smaller names as well, 100 to 500 crores odd, or promoters that sold some kind of stake, DLF and the likes in there. So you put all of that together, it's nearly around $3 billion odd. So promoter selling, well, you could view it two ways. One is, it showcases the depth of the Indian markets, and maybe Indian markets are offering something that other emerging markets are not offering. The kind of depth out there. But on the flip side, you'll say, hey, the promoter is the best analyst of his own company, right? And if he's cashing out, is there a cause to worry? Well, time will tell. And that may not be a very, very fair way of looking at it. So time will tell. But for the time being, the big question is, who's getting it right? The promoter entity taking some money off the table, or maybe investors? So we'll know that in a few years from now. But let's put that question to Amish. Amish, well, how do you read this? Promoters selling, depth in the markets, but a lot of appetite as well. We haven't seen this in a while. How do you view it?
So, Nigel, I would really look at that on a case-by-case basis. There are some special situations as well, in which there were large capex plans which had to be funded, and therefore raising money is absolutely necessary. In fact, I would argue that selling stake right now is only going to bring their balance sheets in a healthy shape. And then there are some situations where the promoters wants to just cash out. They are not going to run that business going forward. So I think on a case by cases, the answers may be different. I don't necessarily see this as a negative.
Yeah, absolutely. And another point maybe, just maybe some of these promoters have other inorganic plans as well. So maybe they're raising some money to go for a couple of other assets, just keeping that open-ended as well. So we'll see how that goes. But take your point, it may not be viewed as negative, but it may be a positive, right? Other emerging markets may not be offering this sort of liquidity, this sort of depth.
Absolutely.
By the way, are promoters the best analysts in the company, or are analysts the best analysts in the company? Just on a lighter note.
I would go with the former. Obviously, they are running the business.
Come on.
How can you even compare, Prashant?
No, it's serious. I mean, actually, if you think about it, I completely agree with the basic punch of the point that, well, they know the company the best and they know what they want to do. That we don't know. But from a stock market point of view, do they know what a business is worth? I mean, what it should be worth, that the market decides, right?
Luxury sales are at all-time highs. That's probably why they're cashing in.
But that could be another angle, very good angle to that. Okay, I would if I were them. But anyway, Ekta, pharma stocks, right? That outperformance, what are you noticing there?
Well, if you look at the index itself, it's up around 20-odd% in the past 3 months, and we have multiple stocks which are at fresh 52-week highs, as well as record highs. So what's leading to this outperformance that we've seen in the pharmaceutical space? Let's start with the fact that there are key drug opportunities right now in the US, which is actually resulting in a lot of companies being positive or showing a lot of good earnings. So for example, we have Revlimid generic, which is a key cancer drug. A couple of these companies could make anywhere between $200 to even $500 million in terms of earnings within 1 year from this particular drug. Next, we have Sun Specialty portfolio. It could hit $1 billion this year. We have Spiriva generic for Lupin, which they've managed to launch. They could rake up $100 to $150 million in terms of earnings. Now, that is in conjunction with an improving US markets. We have price pressure, which has improved in the US. It's mid-single digits versus double digits earlier. We have drug shortages, which have which could benefit companies in terms of opportunities, the injectable plant shortage for Pfizer, which could be a benefit. The other key point is that there is gross margin improvement which has taken place. This quarter itself, there's been 100 to 500 basis points gross margin improvement that we've seen because of key factors such as inventory liquidation, key starting material supplies easing in China, and it is estimated that there could be a range of 200 to 400 basis points in terms of an improvement of gross margins in FY24. The other big cue, domestic markets, they're doing well. Growth was between 6 to 15% in Q1. FY24 is expected to range between 8 to 10% NPPA amnesty scheme is one big trigger to watch out for. Lastly, there could be M&A, large equity deals that could be taking place. We've all spoken about Cipla. It's at a record high. There could be a possible deal in the offing. There is Glenmark Life, where there could be a 7 to 8% stake sale which could take place because of by law. And we have Biocon Biologics also, which could be raising some amount of equity. Lastly, I'll end with the valuations. While these stocks have seen a strong run-up, they are still getting close to their 10-year price to book value, so there's still some room there. In terms of risks to watch out for, there's pricing pressure which is re-emerging, US FDA issues, as well as any kind of regulatory headwinds which the pharmaceutical space could see. But Amish, you already discussed pharmaceuticals. I'm going to ask you about hospitals, because we saw a great listing from Yatharth. We had we've seen hospital companies do well in Apollo, Max, Fortis. Is that a space that you all are looking at?
Absolutely. There is still a lot of undercapacity in that space. Margins for that sector is also likely to improve. I think that is a sector that is still waiting to explode in a big way. It is underpenetrated. The healthcare system in general is underpenetrated in it. I definitely think that is a sector for long runway for growth.
Okay, that's been a big one, right, in the last fortnight, in the last couple of months, actually. Let's do one thing. Let's take a quick commercial break. On the other side of the break, we'll continue to decode the market action and take stock of the BRICS Summit that's coming up, all that you need to know in a bit.